Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hi, I'm Vinay Joseph, the Chief Investment Strategist at Standard Chartered Bank, India. Welcome to another edition of Views from the Street, bringing you market views and insights on how you should look at your investments. Today, we are joined by Ms. Radhika Gupta, CEO, Edelweiss AMC. Thank you, Radhika, for joining.
Thank you for having me, Vinay.
So the first question, it seems that risks have risen over the last few weeks with concern regarding the Omicron variant, more hawkish central banks, and lingering China policy concerns. Do you see the record-breaking equity rallying cooling off in the near term?
So I'd say a couple of things here. One is, of course, it is very hard to predict short-term market movements. But on the back of the rally that we have seen, 5 to 10% cool off at any point in time is not something that should take markets by surprise. Two specific things I would say. On Omicron, I think the verdict is not yet out scientifically or medically. And the second thing I would say on Omicron is what we learned from COVID wave 2 is that even when the virus is severe, predicting both government's reaction to that and more importantly, capital markets reaction to that, stock markets reaction to that is extremely difficult. If you remember COVID wave 2, it was devastating for India. But it was actually not very, very difficult from a capital markets point of view. So I think that is more difficult to predict. What is, I think, an immediate area of concern is, of course, inflation. For us, the center point of everything is finally corporate earnings. And if you continue to see inflation in the Indian context, and right now I don't think that number is out of whack, but if you start to see that eat into numbers of companies, a little bit of signs of that, then that could be a cause for concern. I think in terms of US interest rates rising, perhaps it may happen sooner than later, but hopefully if it comes with meaningful growth, it may not be as much of a challenge. But as I said, and I think in a rally like this, a little bit of cooling off is not unexpected and should not take anyone by surprise.
Thanks, Radhika. Second question, you have been a big proponent of the hybrid category of mutual fund. Do you think these strategies enable investors to maintain asset allocation given their risk profile? And how should you position it in your overall portfolio?
So I'm absolutely a fan of the hybrid category. I think it's an all seasons category. It's a category I personally invest in all the time. I think it is very difficult for any investor to predict markets, at the best of times. And ultimately, a good portfolio is like a balanced diet. It is about having asset allocation between at least equity and debt and, hopefully some other diversifying asset classes. I think the hybrid category does that really, really well. In today's market where you want to enjoy continued equity upside, plus have downside protection, I think it is really powerful. We saw the power of hybrid funds in a period like March 2020 in particular. So I think they're a very meaningful category and they can become a very interesting part of your core asset allocation. And then you can layer it with international funds, mid-cap funds, etc., etc. But it's a very stable part of your core portfolio.
Thanks, Radhika. Finally, there's been a lot of debate between active and passive, and it seems it has increased post-COVID. What are the merits and demerits for both? And given as a fund house, you all have a lot of strategies on both the sides.
So we are, I give you the disclaimer, we are about a 50-50 fund house in terms of active and passive, which is rare in India. So I think I can speak without a little bit of bias. I don't think there is a need for debate. I think both can peacefully coexist. And ultimately, it's about finding a good product and a good solution. There are good active products out there, there are good passive products out there, and there are bad products in both categories. There are certain categories that perhaps lend themselves really well to active funds. We run an IPO fund, for instance. That's a really bad passive category. You just don't buy every IPO out there. And we run a very large fixed income passive business. And I think fixed income in India is largely meant to be passive. So I don't think there's actually a versus here. And I think that's too premature a debate. Our approach has been, and I think I would tell investors, build good products, focus on your asset allocation, on equity, debt. And once you've decided your asset allocation, find the best product to meet your need. I always say, once you've decided the cuisine you want to eat, you can decide whether you want to cook it at home, eat it at an ODP restaurant, or eat it at a 5-star. All the options are there.
Thank you, Radhika, for joining our podcast and sharing your views and giving us an idea of what to expect in the coming months.
Thanks, Vinay.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.